Well, hello there, and welcome to another episode of Real Estate Investing with Jay Conner. I'm Jay Conner, the Private Money Authority, and the host of our show. If you're brand new to Real Estate Investing with Jay Conner, whether you're listening in on iTunes or Google Play or following us on one of our YouTube channels or Facebook live streaming, we're glad you're here. If this is your first time, we talk all about different kinds of real estate. Single-family houses, commercial, land deals, self-storage, anything to do with real estate investing. And again, if you're brand new, I'm known as the Private Money Authority because from 2003 to 2009, I was relying on local banks and mortgage companies to fund my deals. And I got cut off like the rest of the world did in 2008, 2009. And I learned about this wonderful world of private money. So I haven't missed out on a deal since 2009 for not having the funding. And so if you would like to get plugged into funding for your single family houses, I've got a free online training waiting for you to go to. So check it out after the show is over. Go on over to www.jayconner.com/money podcast. That's jayconner, jayconner.com/money podcast. And there I'll be teaching you the 5 easy and quick steps from having no funding for your deals to into the millions of funding, again, without relying on banks or mortgage companies. Well, also here on Real Estate Investing with Jay Conner, since we launched in June of 2018, I've had some amazing guests here on the show share their secrets and strategies as to what they're doing. And today is no exception. So my guest today, after 16 years as a firefighter and a paramedic, he launched his career rapidly becoming one of the nation's top real estate investors. So within his first few years, he had transacted millions of dollars of real estate and had become one of the nation's leading experts in both residential and commercial transactions. Well, his passion for business and real estate put him on the radar of A&E Television Network, as well as multiple news organizations like CBS, ABC, CNBC, Fox News, and CNN. In addition to that, the New York Times reported that his series titled Flipping Boston posted the highest ratings ever for the A&E network at the time of its airing. His greatest joy comes from being a husband and a father to 3 boys. And so with that, I'm so excited to have here on the show with us today, Mr. Dave Seymour. So Dave, welcome to the show.
Hey, Jay, how are you, man? I tell you, it's funny. I listened to that intro and man, I sound pretty cool,
and
don't I?
Scott, I'm going to need for you to do a little edit right here because my internet has stopped working. So I've got to sign out and sign back in. So if you would, Scott, come to the forefront and keep Dave alive, and I will be right back.
Oh, man, I miss him already. So I got to do this show without Jay. Is that what you're telling me, Scott?
That's right. That's right. It's just you and me. So
that's all right. It's all good, man. I can play this game. No worries.
What part of the country are you in? What part of the country are you in?
Oh, yeah, we're up in Boston, Massachusetts. It's where they threw the tea in the harbor. We've been going through a little bit of a heat wave up here right now. So it's an interesting time, man. I mean, the real estate game in Boston has always been incredibly fluid, and it continues to be. And I got to be honest, man, I'm questioning some of the common sense that people are using in the real estate marketplace right now. So I'm a super conservative investor.
So you think people are being too aggressive?
Yeah, man. I mean, look, people sometimes forget. I mean, I listened to Jay's intro, and he had his own challenges in 2007, 8, 9, 10, which we all did. And, you know, there were investors that folded up their tent and never came back out to play after that. And, hey, man, welcome back. We're good.
I got kicked off the internet for some strange reason, and so ever since you started talking, I haven't heard a word you said.
Don't worry, nobody listens to me, including my wife, Jay. So it's all good, man. No worries.
So
go ahead.
Scott can edit this for us anyway, but so let's pretend like I just said welcome to the show, and you kick it off from there.
All right, man. Well, I appreciate you having me on the show, Jay. Thank you for having me. It's a beautiful day in the neighborhood, even with all of the chaos and the craziness going on in the world, for sure.
That's for sure, Dave. Well, now I'm really curious about how you got on the A&E network and got your show started. What was it called? Flipping Boston?
Flipping Boston, yeah. So I was listening to your intro, Jay. It's kind of interesting that you developed a new source of capital for your deals because the market kind of went sideways, and I went through that same experience myself. I started investing. I was a firefighter, like you said on the intro there, for 16 years, but unfortunately, I had the financial intelligence of a donkey, and I didn't understand capital. I didn't understand how it worked. I'm just following the same plan that everybody else is, and I went to a seminar to learn real estate, and I'm a product of that seminar world. And the funny thing is, man, is I invested the last couple of $1,000s that I didn't have. Well, my wife did. I didn't. It was her credit cards. I was maxed out with a credit score of 2, so nobody was giving me credit back then. But it's kind of interesting. I did what my mentors and coaches told me. Like, I listened to you again at your intro talk about the newer investors, and maybe you got some seasoned investors listening to us today or watching us. But I just followed what worked. And next thing you know, I've done 1 deal, 2 deals, 3 deals, 4 deals. I'm actually doing a little teaching myself. And somebody in the marketing world reached out to me and said they were looking for teams to start another show. And I was still firefighting. So I was like firefighting 42 hours a week and real estate investing every other hour I was awake. And I sent in an application to New York, and no offense to anybody, but I loaded it with profanity because I wanted to make sure they paid attention to what I wrote on my little application. And yeah, they picked up the phone, and the guy was kind of laughing, and he said, "You're either a lunatic or a genius." I said, "Is there a difference?" And we started filming a little sizzle reel, and we did 4 episodes. And like you said in the intro there, our ratings were the highest they ever had for that time slot. And they said, "Wow, people like you." And I'm like, I was just doing it for fun. I didn't think it would ever go anywhere. And you can actually see the episodes on Amazon right now, Amazon Prime,
Right.
on their video section. Yeah. So me and Jeff Bezos struck a deal. No, we didn't. But you can find the episodes on there. And I got that reputation as an expert in the marketplace, and with that comes some really good relationships, and you find yourself sitting on Squawk Box and Fox News and all of that silliness. So it's kind of cool, man. It was a cool journey.
That is really cool. So let me give you the 30,000-foot view question. That is, why did you choose real estate for yourself?
Yeah. Look, man, it's like I said, I was good at working, and trading time for money. I'm kind of like a blue collar guy in a white collar world when it comes to that stuff, I was instilled with some good solid core values. Don't lie, don't cheat, don't steal, work hard, respect your fellow man, have a little faith and do the right thing. And that's great, don't get me wrong, but it doesn't give you any financial freedom because the income potential is capped. And I was working construction on my days off from the firehouse, and I was watching these investors like popping up, and I'm thinking to myself, hold on a second, I'm building a deck, I'm digging a ditch, I'm sitting on a post hole digger with a bunch of friends here, and this guy's coming in, and he don't look too sweaty, and he don't look too dirty. He looks like he's having himself a good old time. And his back don't ache, and I think his wife is probably happy as well, right? And It was the investors, man. It was the investors, and I found myself in a position where I was losing my house, man, because I made some bad decisions. And I always knew there was money in real estate. I never understood the stock market, invested in something that was imaginary. And I just went for it. I went to a seminar, and my wife invested in me, and I started doing what they said I should do, and the results followed afterwards. So real estate has been the biggest wealth builder in the history of our nation, period. And why should I reinvent the wheel? Why don't I just learn the processes and get in the game? And I took to it like a duck to water, man. I'm passionate about it. I love it. I dream about it all the time. So yeah.
What year did you go to that first real estate investing seminar?
Yeah, I went in early 2000 and late 2007, early 2008.
Okay.
So
Right,
I came out just as the crap hit the fan, man.
well, I tell you, we're here in the midst of COVID-19 reminds me somewhat of what was going on in 2008, 2009, as far as banks
Yes, sir.
tightening up and et
Yes,
cetera.
sir.
And it was a blessing in disguise for me back in 2008, 2009, because that's when I learned about private money. And when the banks cut me off within 3 months, I had more money at my disposal when I went out to raise money than I had when I had a line of credit at the bank. And
Yeah.
I'm experiencing somewhat the same thing going on right now. I mean, I just had a phone call last week from 4 guys that have a private equity fund that want to give me $5 million just to start doing business with them, right? They called me. I didn't call them, right?
Yeah. Yeah.
Had someone listening to my podcast here not too long ago. They were laid up in the hospital for 3 days listening to the podcast. They call my office and they want to lend me money.
What a terrible problem to have, Jay.
So now, how quick were you able to move once you got your education and start enjoying some success?
Yeah, that's a great question, man. I'd love to tell you, 30 days and it was all fixed. I mean, that would just be a flat out lie. Wealth creation is a process. It's not an event. For me, it took me 12 months to 18 months to be what I call financially free. And what I meant by that was I was able to sleep 8 hours. I wasn't waking up at 3 o'clock in the morning, riddled with fear, doubt, and insecurity. So it took some time. It took a commitment and some traction. But to your point about 2008, I mean, I was telling people, because that's what my mentors told me to do, was to tell everybody what I was doing. And I was telling people, I'm a real estate investor. I'm investing. I can buy distressed assets, and I can put them back on the market. And I'm giving them the whole elevator pitch. And back then, a lot of people were like, "Oh, I'm so sorry that's what you have to do for work." Like, it was like a disease that we had as real estate investors in 2008 and 9. But like you, sir, I created an opportunity out of it. I became proficient at short sales. I became proficient at loan modifications. I became proficient at private lenders. I became proficient in helping people. And I found in my career, and I'm sure you'll testify to it as well, is the fact that the more time I spend helping somebody else, the better it ends up being for me. Right? Amen. Amen. I mean, God is good all the time. And it's like, a real good friend of mine is down in Florida right now. And his faith is something to be admired. And he just says to me, David, just ask the right questions, man. Am I doing his work or my work? Right? Is it all about the almighty buck? He said, because if you find yourself just chasing the almighty buck and you're not doing his work and taking good care of people, he said, you might find yourself facing a little bit of resistance. That's how he puts it. And then he'll give you a little bit of scripture to support it. But, I love that about it. It's like there's nothing better than those families that we helped, during the transference of wealth in this country, which is what we saw in 2008, 9, 10, 11, 12. Being able to help families who were foreclosed on and then put them in a lease option where they could stay in the same neighborhoods, right? Their kids could go to the same school. They couldn't afford the crazy mortgages that reset, but they could afford a good, decent lease option and a beautiful home to live in. And all we were doing was moving them from house to house in the same neighborhoods, So, with some education, you can turn this stuff around pretty fast. And I'm no better than anybody else. I just did what I learned. Rather than finding excuses, I found answers. Does that make sense?
It makes a lot of sense. You and I've got a lot in common, Dave, because my followers hear me say all the time, all the facets of the business is all about serving and helping other people, as you said, because if people didn't have a problem, we wouldn't have an opportunity to serve, from the buyers to the sellers to the private lenders. Even when it comes to raising money, and we're going to hear your story here shortly in the next minute or two about how you've gotten into raising a lot of capital yourself. But, I've never asked anybody for money. They say, Jay, how in the world do you raise all those millions of dollars without asking for money? It's real simple. I put on my teacher cap. I teach people what private money is. I teach them what self-directed IRAs are because they never heard of that stuff.
Yeah. Yeah.
And, you know, the light bulbs go off. And if they've got investment capital or retirement funds, they're not happy with what they're doing, they're going to want to do business with you, right?
Correct. It amazes me how many intelligent, accredited investors I sit down with and communicate with, and I start giving them a breakdown of the tax advantages of using a solo 401k as a retirement vehicle to invest in my fund into a piece of sticks and bricks, a syndicated deal. And it's like these light bulbs go off in their head. And I don't know about you, you tell me this. I found that, you know, high finance, on occasion, it kind of brings an air of, you know, like they said, it's almost pretentious at times. Like you've got this additional vocabulary that they tend to use in high finance. And I was talking to a local guy, a friend of mine, a neighbor, in fact, and he's an injury attorney, very successful. And I'm in the middle of my conversation through teaching. Obviously, I'm raising capital. We're salesmen. We're good at what we do. But he stops me in the middle of it and he says, David, you got to stop. I go, what? He goes, I just figured out what you're doing, because I buy larger commercial assets, you know, 60 to 150 unit apartment complexes, not just one of them, but 30, 40, 50 of them. And then I fix them up. I get the rents up and I create a better asset. And I'm trying to give him the delivery, Jay. And he says to me, David, stop it. I go, what's up? Did I offend you? He goes, no. He goes, I think I understand what you're saying. He said, all you're talking about is flipping Boston on steroids. Instead of just taking a little single family house and making that pretty, he said, you're doing 5,000 units and making them pretty, correct? I said, yeah, that's right, Kevin. He said, okay, how do I subscribe? Let me see if I can get some capital into the fund, you know? And it's amazing because it's, you know, my trajectory, it's interesting. We were in a marketing meeting a couple of weeks back and I had a young intern in our marketing meeting. And what we're doing right now is we have a private equity fund and we raise capital and we invest in multifamily assets, primarily in the Gulf region of Florida, but other markets. I mean, you guys in the Carolinas are in such a great position there. I mean, it's fantastic, the opportunities there. So maybe we should talk offline, Jay. But, you know, these assets allow us to go in there with what's called a core plus asset class, where we do, just like I said, we take these things and we make them pretty. But it never was that way. I mean, the first deal I did was a $5,000 wholesale transaction on a single family home. And I thought to myself what I'd had to do in the past to make $5,000. And then when I step out of the attorney's office, I'm waiting for the 5-0 to pull up and take me to jail, because it felt so bizarre to have a check for a house that I never owned. But I've learned along the way, to your point, to simplify it. You know, you lead by attraction, not by promotion. I turn away capital, Jay, because it's not a good fit. And, you know, again, the universe works in a wonderful way. If it's of service, which it is for us, because we help people with their long-term retirements, they get to invest in our fund. They get a preferred rate of return, targeted rates of return in double digits. And then for the life of the time that their capital is working with us, you know, they're north of targeted 20% returns on their money. So it's a real good asset class. And unfortunately, COVID has, or fortunately, depending on what side of the equation you choose to put yourself on, you know, COVID has given us a massive opportunity, because the buying is already there. The buying opportunities are right in front of us right now. And we're just hungry to take these assets down, help the sellers, help the tenants, help our investors. I get warmed up, man. I get on a roll. You got to stop me and ask me questions. Otherwise, I just keep going, man.
No. You remind me of me when I'm on the other side of the microphone.
Sure.
So speaking of COVID, what's your prediction and what's your take on what's the short-term outlook from COVID, and what do you think is the long-term outlook and consequences on any front?
Yeah, it's you know, we're kind of like pull off the Band-Aid, man. I mean, here's what I see. We've got a short-term pain that we're going to have to experience. We're going to have to experience as a nation. We're going to have to experience it together. You know, depends on how you look at it. So we've got the forbearances where the banks have, allowed tenants to, or owners to not pay their mortgages. You've got tenancy not paying their rent. We had the PPP, the protection program there for small business. Mr. Trump wrote everybody a check. There's more capital coming out, which in its essence sounds great. And it's a difficult position, Jay. It really is, because it's like there's the one side of me that used to live paycheck to paycheck that understands how necessary that is. But then there's now the other side of me, the businessman, and I look at it and I say, well, there's no transference of services for that money. And if there isn't a true transference of services for that capital, it's almost like a house of cards. It's it's doomed to have a failure point and a stress point. And when we get there, we will see an increase in foreclosure. We'll see these challenges going forward, and we'll get through them. We're America. I'm an immigrant to this country. I came from England back in 1986. I was born in London, but I came to the greatest country in the world for growth, for economy, for the ability to really be the best we can be. So we're always going to overcome. So short term, I'm sorry, we're going to have to feel the pain. Long term, there'll be two kinds of people, just like there were in 2008, 9, 10. There'll be victims and there'll be victors. And I sense that we will be the victors, and that's not a moral battle. It's just an intellectual battle of finance and real estate and business. But to be on the other side of it as a victor, we have a greater opportunity to help the people who didn't come along the journey with us on the financial side. That's kind of my thought process on it, and that's why we're so bullish on our buying right now with investor capital, because everybody else is fearful. We go in there and we just get the good buying opportunities.
Take a couple of minutes and tell us, in summary, your journey from, I suppose you started with single family houses. You mentioned
Sure.
Your first deal being a wholesale deal, and then you went to commercial, and now you are in the capital raising business, and you have a fund that people can take advantage of and invest in. Give us an overview of that journey of when, what, and why.
Yeah. Well, we don't have nearly enough time, Jay. I've always tried to say it in 3 words, but it always comes out in 300 for some reason. It's like I said, man, I learned the fundamentals of real estate. First transaction was a wholesale transaction for a house I never owned, and I made $5,000. And I thought to myself, if it's legal, if it's honest, and it's ethical, I'm not going to do this once. I'm going to do it as many times as I can. And, you slowly get out of debt. And then I start doing a little bit of single family. Then I'm doing a lot of single family. Then I pick up that first 2-family unit, then a triplex, then a fourplex. Then I'm always got my eye on the commercial arena. So I was in a marketing meeting, as I was saying, and I had a young intern in there, and they said, why should anybody listen to you as a fund manager with $100 million invested in commercial real estate throughout the country, primarily in the Gulf Coast? Guy says, you're that flipping guy from TV. And I went, oh, from the mouth of babes. Kid wasn't no more than 21 years old, fresh out of college, came in as an internship, fresh out the mouth of babes. And it's interesting because I have always been involved in commercial real estate. Had a portfolio of about 110 doors at one time in Sanford, Maine, which is just north of here. A C-class property, C-class neighborhood. I learned very quickly that I just want to be the bank. I don't want to be the property manager. So, I've learned a lot along the way. I've coached people through large commercial transactions. I've rubbed elbows in the self-storage space. I've always avoided office and retail. How sad is it right now for leisure, office, and retail investing right now? It's a very hard time. So commercial has always been in my wheelhouse. It's always been my excitement button. And a friend of mine by the name of Walter Novicki reached out to me, raised about 125 mil in syndicated commercial deals in multifamily assets throughout the Gulf Coast. And he said, I want to bring you star power, is what he said. And I always giggle when somebody says that. He's like, well, you've got a national reach. He said, why don't we combine efforts, your team, my team, let's get together. and put the fund together. So the fund is now up. We're raising capital. We got a couple of acquisitions that we're about to take down. We're raising $100 million. We pay, like I said, a preferred return, a double-digit target returns to our investors. And it's an exciting time in the middle of all this chaos, Jay. You know, it really is.
That is awesome. Thank you for giving us the overview. Now, you've got a free ebook for our audience and listeners. So what's the ebook that you're offering to everybody?
Yeah, you can see right on the screen there, freedomventure.com. That's our front door to our website. Spend a little time there, learn a little while you're there. Scroll down to the bottom of that page and you'll be able to download a free ebook that I wrote with my property manager, a guy by the name of John Dessau. He's out of Chi-Town, Chicago. John manages approximately 3 million square feet of multifamily real estate. He's been an active investor himself for over 25 years now. We wrote that book together. It's called Unlocking the Code to Multifamily Investing. It's an easy read. It's not too heavy, but it'll give you the high points and it'll show why investors want to invest with us. It's protected. You know, there's a security there. They don't take the liability that most investors do, or actually own the assets themselves. They own a piece of the company that owns the assets. So it's a smarter play, big picture, for a lot of investors who don't have the time to get their hands dirty like we have in our careers, Jay.
That's awesome. Well, it's been a pleasure to have you here on the show, Dave. Final parting comments.
Yeah, just know that it's going to be okay. It's going to take us a little bit of time, and to always educate, don't speculate. Right? Work on the education. Understand what you're investing in, but don't be somebody who just analyzes all the time and doesn't do anything. All right, take a little action. Get off the couch and get in the game, because it's the best game that there is, I think.
That's great. Well, there you have it, folks. Mr. Dave Seymour. Again, you can follow him, get the free ebook, and also find out about investing opportunities at www.freedomventure, FREEDOM Venture, VENTURE.com. Thanks again, Dave. Good to have you on.
Appreciate you, man. Thank you. God bless. Have a great day.
All right, there you have another show, folks. I'm Jay Conner of the Private Money Authority, wishing you all the best. Here's to taking your real estate investing business to the next level. We'll see you on the next show.